It seems like in the past week, the stock market has been crashing. So here are 10 reasons why I think the stock market will continue to crash. The Delta variant is picking up steam and could cause economies to shut down again. The Taliban taking over Afghanistan could cause geopolitical tensions. The Pfizer vaccine might not be as effective as people anticipated, and booster shots could be required. The Federal Reserve is tapering off its buying of assets. This means there's less money being pumped into the stock market. Canadian elections are happening very soon, and this means uncertainty for businesses. And investors hate uncertainty. And this could cause some investors to take some money off the table. Inflation. What else is new since 2020? Home Depot earnings were a little bit scary as we realized lumber prices are not sustainable, and they have been crashing as well. Economic growth is slowing down, and there's unevenness in how the economy is recovering. A major one is political risks from China, as China is looking to crack down on big tech companies. We see this with Alibaba, JD, as well as Tencent, all these companies dropping 40% or more. September is seen as one of the weakest months because mutual funds have their year-end around now, and they might be selling off some assets for tax loss harvesting. Investors are also coming back from vacation, and they might be selling off some of their losers or winners to take profits. So those are 10 reasons why the market will continue to crash. But wait, I'm not a person who likes to spread FUD, and these are just 10 reasons why I could find in the news that the market could continue to crash. But I'm a long-term investor. If you guys have been following my channel, you guys would know that. Before I talk about all the stocks I'm looking at buying right now, as well as what I'm doing as my stocks are falling, if you haven't yet opened up a Wealthsimple trade account, you can get $50. And if you sign up for Wealthsimple Cash on top of that, you can get an additional $25. So $75 for free down below. Here's things that you should do if you're also a long-term investor. The first thing is to dollar cost average into your most favorite positions. Because nobody ever knows when the market is going to crash, if you dollar cost average, you'll continue to buy the dip if it continues to dip. However, if you're a long-term investor, you know that the market will go up eventually. And if it doesn't, then we're all screwed and it's probably the end of the world. At that point, what use is money anyways? The second thing that you should do is stop micromanaging your portfolio. And this is one of the biggest mistakes investors can make. If you're micromanaging your portfolio, you'll continue to get stressed about your positions that continue to drop and drop and drop. A lot of people make an investment in houses, and if they were to look at the price of their house every single day and try to figure out what the market would pay for it, man, that's really stressful as a homeowner. You'll be always looking if you should move, if you should sell, if you should buy, if you should hold, or if you should rent, and when is the optimal time. Now, if you're buying into your positions and you know they're great companies in the long run, then you have nothing to worry about. In my time in the stock market, I've tried to micromanage my portfolio sometimes, and it just didn't work. There's stocks that I sold. If I held on to them today, I could have doubled or tripled my money. These stocks include ATS, Aritzia, CFI International, as well as Shopify. I sold all 4 of these stocks, thinking that I was smarter than the market, and I could take this money out of these investments that I only held for maybe a couple months or so and put it elsewhere to have significant gains. However, that was not the case, and my money would have been better off left in those companies. Just because a company doesn't move for a month or 3 months or even a year doesn't mean that it's a bad company. The company's business and the stock market price are often disconnected. If your portfolio only consists of 1 or 2 companies, then you should consider diversifying. If you're only putting your eggs into 1 basket or 2 baskets, the chances of those companies tanking and losing 30%, especially if they're high growth companies, is very high. And if you only put all your eggs into 1 or 2 baskets and you're wrong about those, then you could see major dips in your portfolio. The last thing that you should do right now is write down companies that you want to buy if their prices continue to drop. Some of my favorite stocks that I'm looking into right now are Alibaba, JD, and Tencent because they've all dropped 40%. As well, Amazon has continued to come down from its all-time highs and looks like it's trending a little lower. We all know Amazon's a growth beast, and they continue to invest all their profits into new business ideas. And this is a sign of a great growth company to me. I'm even looking at airlines right now because 5 or 10 years down the road, I'm sure these airlines will recover. And right now they're dropping a bit. Lastly, there's Airbnb as well as Uber, and these 2 stocks have been hit fairly hard because people are thinking about the Delta variant could cause more travel restrictions, and these stocks are getting hammered by that. So I hope you don't let your emotions get the best of you and sell out of all your positions and quit investing, because that's one of the biggest mistakes you can make right now. Invest for the long term, and eventually I'm sure your wealth will compound 20, 30, 40 years down the road, as most of you who are watching this video are between the age of 25 and 33. free. If you are new to investing, check out this video right over here because it will tell you the 4 biggest beginner mistakes that you can make as an investor. So please avoid those.